People talked about health IT. There have actually been a couple notable deals recently in health IT. One of them was Click4Care, which is a Central Ohio company, which is refueled. It does management software. Portal invested in Comms. These are both companies that could benefit from a lot of the stimulus money out there. And I know that a lot of companies and a lot of investors are chasing stimulus. How do you discern a company that is quality beyond the stimulus? I mean, there's a lot of these companies that are going to be stimulus fueled that will, after the stimulus money is gone, so will they. But how did you discern with Comms that beyond the stimulus it's a worthwhile company?
Sure. We did look at Comms, and as did others in the room here. So we weren't the only smart ones, I think. But that's an interesting question. Non-dilutive capital, I think, can be intoxicating for the investor as well as the company. I think it's extremely valuable. I think what we look for is companies and opportunities that have looked beyond that, maybe didn't zero down on the microscopic level, but backed out and said, this isn't going to be here forever. It's wonderful that we're able to utilize this type of capital, but let's go down other channels simultaneously. So they're looking at internal rounds from current investors, whether it's at an angel level or whether it's at an AB level. They're looking at further rounds down the line, looking at alternative sources of capital, opportunities for joint ventures, strategic alliances. That's probably what we're magnetized to, and rather than a single focused opportunity. So I could say that about a company that's only dependent upon one source of capital, whether it could be strictly angel money. But the one comment I want to make, though, is that to the contrary of that, I think it's hugely important that early stage companies are looking at this non-dilutive capital source, whether it's Third Frontier, whether it's appropriations dollars from the federal government, whether it's competitive grant situations, SBIR, STTR. It just baffles me the number of early stage companies that have never even taken a look into that. This is non-dilutive capital. It doesn't cost you a big equity slug. It's free money in essence. And I would, I don't know what everyone else on the panel thinks, but I would say the majority of pre-A and A companies that we get to look at have never even investigated the opportunity, which I think is a huge misstep. So one of the first things we do when we get in is recommend that and help pursue that.